stock at the right time.
Good morning, this is Bloomberg Quint Live and you're watching Daybreak with me, Alex Matthew. Here's the headlines this morning. The overnight rout in US stocks spreads to the Asian markets as well. The MSCI EM index has entered a bear market. US stocks have now erased all their gains in 2018. Bank credit growth in India rose to its highest in 4 years, according to RBI data, indicating that borrowers are shifting back towards the banking system. Rising fuel prices, weak currency and competitive fares led to IndiGo posting its first ever net loss since listing. Maruti Suzuki will begin earnings for car makers in the September quarter. High costs may dent the company's bottom line. And among other nifty companies slated to report earnings today, they include the likes of Yes Bank, Bharti Airtel and GSW Steel. But let's talk about the biggest update, and that, of course, has to be the markets and what happened in the US. Another torrent of selling gripped Wall Street on Wednesday, sending the Dow plummeting more than 600 points and erasing all its gains for the year. The Nasdaq Composite, with a hefty roster of tech stocks, bore the brunt of the sell-off, leaving it more than 10% below its August peak. Sue Keenan of Bloomberg News tells you how the session got dramatically uglier in the last 90 minutes in this report.
No matter how you look at it, the latest U.S. market close was ugly. The Nasdaq slipping into correction, having its worst day since 2011. The S&P erasing all gains for 2018, falling for the 18th day in 23 sessions. There is alarm over peak profit threats. A lot of negative earnings or disappointing earnings reports are raising concerns that this may be as good as it gets for the year. And Treasuries rallied for a second day on demand for safe haven assets. One strategist said this is really, quote, off the rails. He said there was nothing fundamentally changed throughout the day and saw this as a technical breakdown. We had disappointing earnings from AT&T and from Texas Instruments, citing weaker demand for chips. That drove declines in communication and semiconductors, offsetting a promising outlook by Boeing. We also had, again, disappointing housing data, which showed further weakness, perhaps, in the economy. After the bell, there was a respite. Tesla, showing profit for the first time, actually managed to get the stock to rally as much as 10%. Microsoft and Ford also came out with positive reports after the bell, beating on profit in sales, although slowing growth in Microsoft's cloud services and Ford dropping its 2020 target were perhaps slight negatives. Sue Keenan, Bloomberg News.
Well, there you have it. That's the tone that's coming in from the US, and in fact, that very tone is quite evident in the markets in the morning today as well. Just about half an hour back, in fact, the three early risers, the Nikkei in Japan, the Australian benchmark and the Kospi, were trading with sharp cuts. They continue to do so. In fact, they have only, the cuts have actually gotten more evident after the opening of the Chinese benchmarks, which have opened in the red about 2% or so. The Nikkei, in fact, is down about 3.4% as of now. The Australian benchmark about 2%. The Chinese benchmarks, both with cuts of over 2% as of now, but it's still early days for them in today's session. The Hang Seng in Hong Kong has also opened with cuts of about 2.3%. So not the best cues going into a session that is likely to be dominated by earnings. A lot of key earnings, as we pointed out earlier in this program. But Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, well, it's not looking good.
You know, Alex, it's becoming confusing whether or not today the market is going to move in tandem with the global markets, because some days it does and some days it just doesn't. But provided that the cuts today are a lot deeper, well, there is a possibility we'll see a negative opening. But I'm going to start off with the SGX Nifty, and that indicates a decline of around 128 points. inching back towards the mark of 10,100 could be a matter of concern. But let's move on and take a look at how we've seen the indices fare yesterday, and we did see some strength come through, where the Nifty advanced by 0.8%, and the mid-cap and the small-cap indices actually outperformed the major indices. When it comes to the Nifty banking index, both the indices also advanced, though not as much as the major indices. And among other sectoral indices which stood out, we did see gains in Nifty Realty as well as the Nifty metal indices. But ADRs at this point in time are indicating, well, some weakness. As you can see, all these stocks are looking at a decline of anywhere between 3 to 4%. And let's take a look at some of the other stocks too. And there you have it, the more weakness coming in. Wipro, however, has seen the least cut, considering the fact that we did see earnings come through largely in line if you disregard the adjustments. So Wipro taking the least hit. For now, FIIs have sold 2,000 crores worth of equity on a net basis. On the other hand, well, DII is plowing back a little over, or rather a little less than 1,900 crores. But that said, moving on, a whole lot of strength came on the back of financials, which did see recovery, where HDFC, of course, gained, and Bajaj Finance, which gained as much as 10%. So that's where a lot of the strength's coming in, and that was followed by Bharti Airtel. In fact, Bajaj Finance and Bharti Airtel were your two top gainers on the Nifty yesterday. Well, in terms of the futures and options space, now it is expiry, so we're starting to see rollovers come through at 65% with a day left. This number is likely to move up. Do remember, a lot of rollovers took place considering the strength came through in yesterday's day of trade. What's anyone's guess what's going to happen today, whether or not we do see the rollovers for the Nifty, or for that matter, the Nifty banking futures, which will also come up to you on screen, will increase at 53% for the Nifty banking rollovers. But let's move on and take a look at some of those other aspects in the futures and options space. In the lower end, of course, it's always been 10,000 put, which has had maximum open interest, while max OI on the higher end remains with the 11,000 call. At this point in time, we are going to keep an eye on something like a 10,400, 10,500 calls as well, which do have significant amount of open interest. There is no doubt about the fact that 10,000 at this point in time will remain a very crucial support. Well, it seems that it's unlikely to move below this mark, at least as far as expiry is concerned. That said, when it comes to changes in OI yesterday, well, naturally, we did see a lot of unwinding coming through in a lot of these calls, and some more writing, I would say, in the 10,000 put. But the India VIX, of course, declined, considering the fact that, well, we did see the indices advance, and the put call ratio, well, that remained largely unchanged. It wasn't for the Nifty, it was at 1.1. The Nifty banking put call ratio at around 0.82. And in terms of stocks, well, Diwan Housing Finance moves out of the F&O ban. Among other stocks I'm watching out for, let's pull up something like a Bajaj Finance, the top Nifty gainer, as I was suggesting, up 11%. And we also had a lot of traction in Bharti Airtel. We saw longs there as well, with rollover at 65%. On the losing end, the other brother, Rajiv Bajaj, well, his stock is under pressure, down as much as 4.3%, where we did see a considerable increase of open interest towards short. So possibility of some weakness, at least as far as opening is concerned, Alex. But again, all eyes will remain on the global indices and what impact they have on our market.
As of now, it's not indicating the kind of downticks that we've seen in some of the other markets.
Right.
We'll have to wait and watch. Thanks so much for that, Agam. Let's talk about the other markets in India. We're talking about the rupee and the currency market, of course. The rupee strengthened by 41 paise to close at more than a 3-week high of 73.16 against the dollar on Wednesday, as global crude oil prices eased and domestic equity markets staged a rebound. Remember, that was yesterday, though, and the greenback's weakness against some currencies yesterday overseas also helped the recovery in the domestic currency. That may not be the case today, because overnight the dollar has in fact gained in strength, especially against the European currencies. Now, the 10-year bond yield in India also fell to a nearly 2-month low after traders cheered Reserve Bank of India's announcement of open market operations. We'll have to see how those markets pan out today based on the kind of updates that we've seen. But let's talk about commodities, and obviously everyone's focusing on oil. It rebounded from a 2-month low as refiners started to wind down seasonal repairs. Looming US sanctions on oil exporter Iran also helped to support the prices. Last week marked a 4th straight weekly climb in crude inventory, and that has seen domestic supplies in the US swell by a total of 22 million barrels. Meanwhile, participants are still unsure about how much oil supply will be removed from the market once the sanctions start. But India, Japan and South Korea are already scaling back on purchases of Iranian crude, which suggests that the number might just be larger than previously thought. In a related development, Iran's oil minister has reversed his decision to transfer ownership of 9 state-owned oil companies from a ministry to the newly formed NOC, which would enable the incoming government of Prime Minister-designate Adel Abdul Mahdi to make its own decisions in the oil sector. So far, traders have shown little fear that international criticism of Saudi Arabia following the killing of journalist Jamal Khashoggi will prompt retaliation by the kingdom in the form of slower oil output. However, Saudi Arabia's energy minister earlier this week, in fact, said not just once but twice that the country would play a responsible role in energy markets. Let's also talk about the base metals because, and in fact, let's pull them up if we can. They're trading weak from what I can see on my screen. In fact, even in the Shanghai markets, which have just about opened up, not much to celebrate there. Let's also talk about the gold prices, which are marginally in the green as of now, possibly on account of a safe haven demand, considering the kind of sell-off that you've seen in the equity markets globally. But let's shift to earnings now and talk about IndiGo, because that was perhaps the big headline yesterday in terms of earnings. It flew into a lot of turbulence in the second quarter, not least of which was rising fuel costs in a highly competitive environment. Add to that some neo-engine trouble, and it was a perfect storm for the country's largest airline. Somit Sarkar is here to tell you why Interglobe Aviation posted its first loss since listing. Somit, over to you.
Well, if you see, there's no doubt that the quarter was weak for IndiGo, but what is more of concern is that there was no positive key takeaways even from the earnings conference call. Now, if you see the headline numbers for IndiGo, the company's revenue was up by around 17% to close to 6,185 crore rupees. However, the EBITDA, which is a key profitability metric for an airline company, that was down by nearly 93% to close to 1,111 crore rupees. Now, EBITDA margins that slipped to 2% from 29% reported by the company last year, while the company reported a net loss before tax of close to 988 crore rupees versus a net profit after tax of close to 552 crore rupees. Now, the reason why I'm taking the net loss before tax number is because that is the actual loss incurred by the company. Now, the company has recorded a deferred tax credit of close to 336 crore rupees and because of this reason, the total net loss has come down to around 652 crore rupees, but the actual net loss incurred by the company was close to 988 crore rupees. Now, the factors that led to such a weak quarter, well, they have remained the same. Now, first is the falling ticket prices. Now, if you see yields which measure the average earnings per passenger per kilometer, now that declined for the third consecutive quarter. In fact, the company reported its lowest ever yield since listing in the second quarter of financial year 2019. Now, this was because of competition that the company's yield fell by nearly 10% to close to 3.21 rupees in the second quarter. Now, that too in a rising cost scenario. Now, if you see the fuel cost, now that increased again for IndiGo, majorly because of higher crude prices. Now, in Q2, if you see, IndiGo's fuel cost per seat kilometer was around 1.56 rupees, the highest that the company has seen in the last 15 quarters. Now, despite the fuel efficient fleet, if you see the quantum of increase for IndiGo, now that has been higher. Now, if you see the fuel prices, they have increased by nearly 40.5% compared to last year, but IndiGo's fuel cost has increased by nearly 43%. Now, third is the weaker rupee. Now, rupee depreciated by nearly 9% compared to last year, which led to a 7 times jump in their foreign exchange losses. Now, this is something that they cannot do anything for, but lower ticket prices and higher fuel costs is something that could be a concern for investors. Now, some other factors that had some or the other impact in the second quarter earnings. Now, their other income that increased by nearly 53% to close to 329 crore rupees, which also helped them report a lower net loss. However, a 35% rise in other expense offset these positive. Now, this rise in other expense could be because of higher maintenance costs that the company has been incurring as they had inducted older aircraft when they were facing engine issues.
So much for that, Somit. Now, those results did come after market hours, so you'll have to watch out for IndiGo, definitely, or rather Interglobe Aviation in trade today. Let's talk about the other results, and the last of the major IT companies, Wipro, posted its earnings yesterday. It has registered a 10% fall in second quarter net profit as it recorded a loss from a one-time settlement with one of its key clients. However, better execution and revenue accretion from a large deal win helped the company. Now, its margins were hit by that loss that I mentioned that emanated from the settlement with one of its clients, but net utilization levels picked up to 85.5%, yielding higher efficiencies. And Wipro's CFO, Jatin Dalal, is looking forward to see more revenue flow from the next quarter. In conversation with Bloomberg Quint's Nishant Sharma, Jatin Dalal said that the company is on a transformational journey, and this, he expects, will help them in the long term.
So, as you know, we have taken only 1 month revenue of Alight in quarter 2. So, there will be certainly a momentum which will get created because 2 months. But more than that, I think it's a landmark deal. It's a largest deal that we ever signed as an organization, and it's truly what we call as a front office digital experience deal for our customer and our customers' customers. So I would go far beyond the financials of just that deal. I think it's just a deal which makes us look very different from sheer capability and what we can do for our customer standpoint, and therefore we are all very encouraged by the deal and the success behind it.
But any timeline on what kind of impact we'll see from which quarter, the real impact of this deal also?
It will start flowing in from quarter 3 completely, and because it comes with a I mean it's a service which we provide 100% from day 1 to our customers. So it will be fully you will see the full impact of it from quarter 3, and there is no prolonged ramp up period around this.
Right. And looking at the quarter 2 margin, what's the impact of rupee depreciation, the wage hikes, and what's really behind?
So I think we are very encouraged by our performance. Though on the face of it, the number looks at a 14.6%. But if I normalize for the one-time impact we took on our customer settlement, that number is 18.1%. And there, the overall 2 elements have played out. We have expanded our operational margin by operating levers by about 1.8%, despite taking 2 months salary impact. And we have been helped by currency by about 70 basis points, all of which has flown through the margin. So overall, I think it's been a very good quarter. As a CFO, I feel very happy that we expanded margin from a normalized basis in quarter 1 to quarter 2 by a 2.5% kind of number.
On to earnings that will come out later today. The first up, of course, is going to be Bharti Airtel. The telecom maker, not the telecom maker, but the telecom player is likely to continue to see pressure on account of the competitiveness in the space. Somit Sarkar is back to tell you what to expect. Somit, over to you.
So if you see the headline numbers for Bharti Airtel, now the revenue of the company is expected to rise marginally to close to 20,100 crore rupees, and this is the consolidated revenue that I'm talking about, while the EBITDA is expected to drop by nearly 3% to close to 6,500 crore rupees. Now, margins now that will contract to nearly 32.2%, while the company is also expected to report a loss of close to 990 crore rupees for the first time. Now ARPU, that is the average revenue per user and the key number for the telecom operator, now that is expected to fall yet again, and in this quarter is expected to fall by nearly 7% to close to 98 rupees. Now in this quarter it is expected to fall because it will see a full impact of the Telenor consolidation, which would lead to ARPU dilution, also because of ARPU down trading and because of pricing pressure seen in the postpaid segment of Airtel. Now India margins, now that will be impacted because of the rise in diesel prices, strong network rollout, and because of higher tower rentals post the Vodafone Idea exit. On the India business, the home broadband segment is expected to remain under pressure, while the DTH business is expected to benefit because of the price hikes taken in the first quarter of financial year 2019. Now from the Africa business of Airtel, analysts are expecting healthy trends to continue on the back of tight cost control initiatives initiatives taken by the company. Also, the local currencies in Africa were stable against the US dollars, which should help the margins to remain stable in the second quarter of financial year 2019 for the Africa business. Lastly, a weaker rupee, that could result into a higher interest cost and a foreign exchange loss for Bharti Airtel in the second quarter of financial year 2019. Now, key things to watch out for would include the company's capex plan for the second half of financial year 2019, how they are going to fund it, what is the comfortable leverage ratio for the company, their outlook on ARPU and revenue, and also management commentary on Africa asset listing, any commentary on further stake sale in Bharti Infratel and in the DTH business, and management commentary on the impact of Jio's aggressive tariffs and the impact of Jio Gigafiber would be key things to watch out for from the earnings.
Absolutely. Thanks so much for that, Somit. Sticking with earnings, robust business momentum is expected to reflect in Yes Bank's earnings, but the street might be more interested in hearing about the lender's search for a new chief and the transition plan at the helm. Shraddha Babla is standing by with what's priced in from the numbers and the key expectations in terms of the commentary from the bank. Shraddha, morning.
Well, good morning, Alex. The bank had already shared its quarterly updates on 1st of October. So we do have certain parameters which are already known. The loan growth had come in at 61% for the quarter. CASA ratio had come off slightly to 33.8%, and the gross NPA number had inched up marginally to 1.35% from 1.31%. Nevertheless, the management had reiterated the credit cost guidance at 50 to 70 basis points for FY19. And on liquidity also, they had said that they have a liquidity coverage of 101%, so that's in excess of RBI's requirements. Now, what are the numbers that we are expecting to watch, and what are the estimates? Well, net interest income, the growth there is expected to be about 27%. Net profit is seen 27.6% higher at 1280 crores. And also for this quarter, deferred MTM provisioning requirements could continue to keep the provisioning levels elevated. On the other hand, slippages and credit costs are expected to moderate, at least on a sequential basis. But aside of the Q2 performance, which is expected to be strong, what is going to be more important to watch out for is going to be the outcome of the FY18 RBI audit for any divergences. That is, of course, if the RBI audit is complete. Exposure to ILNFS is another important key thing to watch out for, and the kind of provisioning that the bank decides to make on it. The third is capitalization levels, given the strong trend that we've seen in the loan growth. So the capital remains extremely thin, with the CET1 at just 9.5%. And also, finally, the details on capital preservation, on outlook for growth and management transition are going to be more important, like you said. So those are the things that we are going to be watching out for.
All right. Thanks so much for that, Shraddha. Now, on to earnings from the automotive space. Maruti Suzuki has been under pressure in terms of its stock price, but its earnings will come out today. So key numbers to watch. In fact, Yatin Mota has all the updates for you in terms of what earnings are likely to come in and what the commentary is likely to be when it comes to Maruti's Q2 numbers.
It would be a slightly muted quarter for Maruti Suzuki this time. People have been expecting strong growth, but clearly the commodity costs have been weighing on the auto company's result this time in the second quarter. So if you look at the revenues, only a 2% growth expected here, to do with the fact that there has been a decline in the overall second quarter volumes, because last year we had the festive season base. So because of higher base, we had a lower volume growth on a year-on-year basis. EBITDA also, as I was mentioning earlier, because of lower volumes and higher costs, would be seen lower by nearly 13% on a year-on-year basis to come in at a little over 3,200 crores. Profits also seen by declining by nearly 19% to come in at 2,023 crores. Margins, as the case with the two-wheeler companies which have reported earnings so far and the auto sector companies which have reported so far, have been seeing weak margins. Maruti also could see a margin decline of nearly 150 basis points on a year-on-year basis. Margin seen at 14.4% versus a level of 16.9%. Of course, because of the recent price hikes, there could be some realization growth for Maruti Suzuki. But apart from that, the management commentary on the rural market demand, how the demand has been shaping up with the festive season, is something that we'll be watching out for apart from the earnings.
All right, now Shraddha Babla is back to tell you all about the stocks in news. Shraddha, it's going to be a possibly weak session overall, but what are the stocks that have caught your eye in the news?
Well, so Alex, I'm going to start off with L&T Infotech, which reported a strong set of numbers. Basically, it was a beat on expectations. Revenues grew by 8% on a sequential basis. EBIT margins moved up by about 130 basis points to 19%, and the net profit grew 11% to 400 crores. You also saw a strong set of performance coming in from International Paper, APPM. The revenue growth came in at 18%, but EBITDA more than doubled to 72 crores, and the margins also went up from about 10% to 21%. That is largely on account of the lower raw material costs. That apart, the net profit has moved up multi-fold from a low base of about 6 crores to 37 crores, and that is largely on account of lower interest costs, which aided the bottom line boost. You also have Mahindra & Mahindra Financial Services. Again, it was a beat as far as the numbers are concerned. Net interest income growth of 49%, net profit grew 138%, so more than doubled to 381 crores. The loan growth was also strong at 26% on a YOY basis, while disbursement growth was strong at 39%, and the gross NPA number sequentially came off slightly to about 9%. Bharat Financial also put up an extremely strong show. Net interest income grew by 95%, net profit by 73%. The loan portfolio grew by 46%, and on the other hand, the gross NPA number came in at 0.4% versus 0.3% in June. SKF India revenue growth of 13%, EBITDA was up about 11%, and net profit grew by 14%. More importantly, they have announced that they will buy back shares at 2,100 rupees per share. That's a 22% premium to yesterday's closing price. So that probably could have a larger bearing on SKF. Watch out for that one. But mixed set of numbers coming in from L&T Finance. And I say mixed because in terms of the operational performance, it was a good quarter. But they have disclosed certain exposures which could be on the stock. So the net profit growth came in at 62%. The gross NPA came down from 7.93% to 7.1%. AUM growth also came in at 26%, but they did say that they have an exposure of about 1,800 crores to certain IL&FS transportation SPVs and about 800 crores of exposure to 3 projects of Supertech. So not sure how that one will react. And finally, you have Lakshmi Vilas Bank, a disappointing set of numbers. Net interest income down by 35%. The bank reported a net loss of 132 crores, while the gross NPA moved up sizably from 10.7% to 12.3%. So I won't be surprised to see a negative reaction on Lakshmi Vilas Bank.
Absolutely. Thanks so much for that, Shraddha, for that comprehensive list of stocks that are in the news. Let's talk about some of the stories that you will find if you log on to the website bloombergquint.com. Of course, you'll find all the live market action, and you should tune in over the course of the day for all that coverage. But here are some of the stories that you'll find if you log on right now. The government expects some changes in the Reserve Bank of India's prompt corrective action framework and is in talks with the central bank about it, according to a senior finance ministry official. And in the US, after a pipe bomb meant for George Soros was proactively detonated by the police earlier in the week, on Wednesday morning, the Secret Service confirmed it had intercepted suspicious packages addressed to former President Barack Obama in Washington and to Hillary Clinton, who is the 2016 Democratic presidential nominee. The FBI said in a statement that there is a possibility that additional bombs were mailed to other locations as well. Well, that's all we have for you in this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.